Steve Liesman joins us now with the results from CNBC's exclusive Fed survey. This hour, we're focusing on trade, Steve.
Yeah, so we're talking about the risks of monetary policy, overall views positive on the economy, but now I'll talk about what people perceive as the risk to trade. First, I want to show you about this group of 42 respondents, economists, strategists, and fund managers. 59% approve of the president's handling of the economy, and that is up slightly, as you can see. Also, the disapprove is down from 35% to 29%. That's not true, however, of their views on the president's handling of trade. The tariff impact, they're seeing a decrease of 59% believe it will decrease growth. 54% say the trade policies will decrease jobs. Take a look at the GDP effect. We asked two questions. The existing tariffs are out there. They think it'll shave about 1/10 of a point off GDP. The threatened ones, along, by the way, with the retaliation, could shave 3/10 of a point off of GDP. That is the average. Then we asked another question. Who wins a trade war? Because this is part of President Trump's policy, the idea that we can outlast them, we can get them. And it kind of backs up the president's at least negotiating idea here, or tactic. 90% think the U.S. is better capable of withstanding a trade war than Canada, 72% versus China, and 78% versus Europe. So they do think we're closer. Mark Vittner, managing director and senior economist at Wells Fargo Securities, writes in with his responses. Trade restrictions are the greatest threat to the expansion right now because they increase uncertainty and cause businesses and consumers to become more cautious. The increase in risk aversion raises the chances of a policy mistake as the Fed might move too aggressively. So this is the thing out there. I mean, somebody said Goldilocks right now, but then you sort of read all the comments and it's like the trade and the monetary policy concerns are the big concerns out there.
Look, 0.3% on a multi-trillion-dollar economy is a lot of money, but ultimately, I think the president and the administration might look at it and say, 0.3%, so what? Okay,
it depends on what you have to deal with. Okay, if you think that 4% is the run rate of the economy, you probably can get away with, by the way, it probably is cumulative 0.1 and 0.3, so it's maybe more like 0.4, but be that as it may. But if you're doing 2.5%, let's say, for example, my idea is right, that the administration may be successful in raising the growth rate potential of the economy from 1.8 to somewhere in the 2.5 to 3 area. You give up 0.4 of that, that's giving up a lot.
And, you know, this idea of who wins a trade war is interesting because it really goes along the lines of which economies are more exposed to trade at all, right? I mean, the U.S. has the advantage of just not being a very export-led economy. And therefore, that's what it looks like when you say we could win it. It's because we don't really rely on it that much.
Or import.
It's not as necessarily the terms are going to get so much better for us necessarily.
I think that's right. And I think that the idea, my question is also a political one. I kind of disagree a little bit with the panelists on the political side of this thing. I think economically we can win this thing if that's the way we want to do it. I wonder politically because he already had to put his thumb in the dike of the farmers. Right? And then there's going to be potentially auto workers who are affected by this. What will the line look like of those who are arguing for subsidies or relief from the retaliatory tariffs? I think politically that becomes a problem for the president, for President Trump, before it becomes a problem for President Xi, because as an essential dictator, he can just ignore his population.